Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Thursday, December 15th, 2022. Let's take another look at the charts. I'll start with this one. Descending two-thirds speed line. You're probably getting bored with me talking about this. It drops, though, daily. The number does change. It's 146.86. And while we've pushed through it a couple of times in a meaningful way the last couple of weeks, we have not yet closed above it. It is our ceiling into even through January, and below which this 123.52 level you see lower right is in reach over the next month or two, and that is nothing more than this long-term channel bottom. So this area, 123.52, in reach by the end of January, holding below 146.86. Every time we test this area presents an opportunity to buy out of the money puts that get a little cheaper each time, and 125, 120 out of the money puts that don't expire, I would say, for at least several months. February expiration might not be a bad idea, but also what is happening here is we're still in this sort of congestive framework, and so you're buying the out of the money puts. They sort of decay, obviously, as they just sit there without any downside price activity. I think the trigger that you might use for actually buying that out of the money put, because then it becomes, you'll probably get more immediate gratification and you won't have to suffer that premium decay, would be a settlement today, for instance, below 138.06. Let's take a look at the day itself. 144.52, just above present price levels, can contain intraday buying, and below which 138.06 is in reach today. If we push or open today above 144.52, this 146.86 speed line in reach again, where once again we can top out through January, and below which 123.52 in reach by the end of January. But as I said, if we close below 138.06, that should set off a more protracted descent as we move into January trade. The following, possibly in as little as 2 to 3 weeks, then in reach of 123.52. And that 138.06 level is nothing more than this descending channel bottom that is based on the last 3-4 weeks of trade. So 138.06 can actually contain selling through the rest of the week into early next, and from here we can rally back into the upper 140s, or actually now the mid 140s, 146.86, within 3 to 5 days of actually testing 138.06. But it would be a settlement below this formation, 138.06, that I think could yield 123.52 within 2 to 3 weeks or so. 123.52 is part of a range of long-term support seen here on the weekly chart that ends at 119.35 that can absorb selling not only on a monthly basis but also a quarterly basis and possibly into later 23. And once again, this area is in reach by the end of January, holding below 146.86, and if we close today below 138.06, we should reach it inside of 3 to 5 weeks, possibly in as little as 2 to 3 weeks.
Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below.
So let's talk upside today. If we happen to push or open above 146.86, 152.42 is attainable. That would be a meaningful rally today. It's right about here on that chart, 152.42. I think that would be the extent of the upside beyond 146.86. And if we close today above 146.86, we should, by the end of next week, reach 157.52, where we could top out on a weekly basis, possibly well into January, and fall off from here. We could then trade inside this widening wedge between 146.86 and 157.52 for several weeks. It would be a settlement, though, above 157.52 that would tell me that we've got a meaningful recovery on our hand as we move into later Q1. The following 1 to 2 months then expected to reach into the low 180s, the 180.73 formation, able to contain quarterly buying pressures if or when tested. And so, as I've been saying, holding below 146.86. We'll keep 123.52 in reach by the end of January. And if we can get up and over 157.52 sooner than later, we may well reach 180.73 by the end of January. Getting inside or being, pushing into the 146.86 to 157.52 region. In other words, if we close today above 146.86, we could actually get trapped inside this zone for several weeks, as I'm saying. It is sort of a no man's land of long-term trend identification. And once we close, if we close above 157.52, then we're off to the races of the upside as we move into the low 180s within a month or two of closing above 157.52. I don't think I could be any clearer than that. And that is really all I need to say for Thursday's Daily Apple Report. I'll be back tomorrow with Fridays. You have a great day.